Tony Kaye and welcome to Property Point. I'm the editor of REA Report and we're talking everything property investment related. I'm joined by Nerida Conisbee, Chief Economist of REA Group, which owns realestate.com.au. Nerida, the property market's just been going gangbusters. Just wanted to talk to you about what's happening in the market at the moment in terms of the spring has sprung syndrome. You know, where the hotspots are in the market at the moment.
Yeah, right. So it was certainly a really strong end to winter. When we saw those price growth figures, I think most people were expecting Sydney and Melbourne to do well. So they've been tracking at around 10% annual growth over the last couple of years. But what has happened now is all the other states have taken off as well. So in every other capital city except Perth, we're now seeing more positive conditions. So really strong end to winter and hopefully a continued strong market in spring.
Yeah, it seems to be going that way. What's the outlook for capital growth?
Look, capital growth, particularly in Sydney, is strong. We've got a shortage of housing, we've got strong population growth, and most importantly, the New South Wales economy has really rebounded. So that's going to really put a lot of support for population growth and therefore a lot of support for demand for housing and capital growth. Melbourne, similarly, going to also experience strong growth, or we expect to see strong growth. Melbourne obviously has far more housing available, so that'll mean some areas don't perform as well as others, but overall, Melbourne will continue to do well.
And what about other states such as other cities such as Adelaide, I should say?
Yeah, I mean, Adelaide is doing pretty well. Adelaide, Brisbane, even Hobart are all seeing growth. They're not seeing quite the same growth as we're seeing in the other capital, in Sydney and Melbourne. Really the only city not seeing strong growth is Perth, and the Perth declines are still occurring. Across the city though, it's quite variable. So if you look in the inner areas, we're starting to see a little bit of capital growth occurring. The challenges are primarily on the outskirts of that city, where we're still seeing lots and lots of new development taking place. So quite very dynamic, not just across capital cities, but within capital cities as well.
And in terms of apartments, that's all, for a while that's been the big cloud hanging over the market, I suppose, in terms of how apartments are going to perform in especially the major cities of Sydney and Melbourne. Yes.
I mean, look, certainly Sydney, less of an issue. There's going to be some spots where we may see a little bit too much development, but I think overall Sydney's seeing about the right amount of development. Melbourne is seeing far more development, as usual. Melbourne always sees much more development than any other city. And again, there'll be issues, not everywhere, but in some parts of town, and primarily the CBD is the one area that people are most concerned about. So Melbourne CBD, it's very used to a lot of development. We've seen around 1,000 apartments per annum being added to the city over the last 2 decades. But we're now seeing around 4,000 per annum being added to the city over the next few years. So it's a big jump in supply. It does worry people. We do have buyers for the apartments. There's a lot of offshore buyers. There's concerns about settlement risk. There's concerns about who's going to live in the apartments, and there's concerns about the secondary market as well. So it's not that, that it's a certain problem, but there are a lot of concerns being raised in that market.
There's still quite a bit of interest from offshore in terms of Australian property?
Oh, without a doubt. I mean, Australia is now in its 25th year of positive economic growth, so it is a unique country from that perspective. People want to live here, people want to invest here, and we are continuing to see really strong levels of investment. There has been some issues with a lot of offshore buyers accessing finance. Also a lot of the additional taxes being added on the eastern seaboard as well. So they're causing a few issues for some buyers. We think though the buyers that will be most impacted will be those at the lower price points. The higher price points, there's less of an issue. But what it's done, it's really spread offshore interest in Australia beyond Sydney and Melbourne. So we are seeing more offshore interest in markets like Adelaide and also in Perth.
We've had that overhang on the market too with negative gearing, and especially around the election time. That seems to have passed now, so it's business as usual. From an investment point of view, have any of the dynamics changed in that sort of area?
Look, I think the fact that negative gearing has been taken off the table is a positive for investors in residential. The problem at the moment for most investors is accessing funds. So APRA's put that cap on growth into the amount that they will lend to residential investors. That is restricting finance for some buyers, and that's probably their biggest challenge at the moment.
I know that the banks have reined in that LVR ratios on investment lending, and that's obviously something which investors need to navigate through to.
Yeah, definitely. Yeah, I mean, offshore, they often won't even lend to offshore investors. I mean, that's if you're an offshore investor trying to get funds from our local banks, it's almost impossible. But yeah, there's various measures that they're using. So, you know, whether it's changing the LVRs, stricter requirements on the amount of income a person's earning, not accounting for negative gearing. Some banks are no longer accounting for negative gearing in their calculations. So they're doing lots of different things to really restrict that total lending that they're giving to investors in residential property.
From an investor point of view, what are some of the key things that they should be considering right now?
Yeah, I suppose, I mean, it depends on what sort of investor you are. At the moment, if you're looking for capital growth, Melbourne and Sydney are still probably your best bets. If you're looking for a strong yield, those cities probably aren't the cities that you'd be looking at. We're finding at the moment regional areas are getting pretty strong yields. And then if you're an investor that is really looking for the bottom of the market, then places like Perth might be worth a look as well, because certainly in Perth, although overall prices are dropping, we are starting to see a bit of a recovery in other suburbs, so in some of this, particularly the inner suburbs. So, you know, it does depend on what sort of investor you are, but given most investors in residential look for capital growth, I think Sydney and Melbourne are probably the two most assured markets at the moment.
And what about regional areas?
Yeah, regional areas can give you great yields. The problem with regional areas is that often they give you great yields, but they don't give you great capital growth. So you're forsaking that capital growth to get that high monthly check. So it's been interesting. Mining towns is a really interesting one to have a look at the moment. So they've seen huge drops in their values. So values have dropped by around 50% in some places, but we haven't seen a similar drop in rents. And so you can get some really high yields in those cities at the moment, well, those towns at the moment. The challenge is, though, prices could continue to drop, so you may lose capital on your investment. So, you know, it's a bit more of a high-risk strategy, and I think, you know, when you're looking at these smaller towns, you really have to look at, you know, how much further could prices potentially drop? Is there any other industry that will take up that downturn in mining? Because that's another consideration. Yeah. Markets like Perth at the moment aren't doing well, but they'll pick up because it's a bit more of a mixed economy. If you're looking at somewhere like South Headland, it's a little bit more challenging.
Yeah. Well, thanks very much, Nerida. Thanks for all your insights, and thanks very much for joining us at Property Point. We'll see you next time.